This conference will now be recorded.
I had raised my hand because I didn't want to interrupt you while you were going, but we had gotten too far.
We're not going to accept it. Okay, so let's go back where we were. So these are the journal entries. These are the journal entries. And what I'm asking you to do is to prepare a balance, income statement and a balance sheet.
Oh, access to that. Let's see.
See cash.
You got 5 minutes.
Money.
Michael, you back on the side?
Actually, sir, I just got off a helicopter and I'm driving. I'm in between Lake Charles and Houston.
Oh, okay.
So
I,
I am
thought you
I am
I
en route.
thought you might have quiet. Okay. But we'll let Kayvon and we'll take up the slack till you get there.
Taking up the slack. Oh man. All right.
I'm like
Let me see.
Enron, that fraudulent.
Yeah, we're looking at that example of a pyramid Ponzi scheme in terms of the journal entries that are made and the financial statements that are shown to the people.
Was there like a template that you had saved on Blackboard that we can always go
To do the
to fill
financial
in?
statements, yeah,
Yeah, just
that
to fill in.
the Excel spreadsheet has it on there.
Yeah, I was looking. I was like, hold on. What do I do with
But
it?
this one was just so simple and easy. I just thought y'all could knock it out.
Would it be under course content?
Yeah, course content, financial review. Sometimes, we don't want the crutch. Uh, Suppose I ask for a trial balance.
You got rid of the numbers.
Going back to it. Oh, so we know we have a cash account. We know we have what account receivable. What else do we have in order? We have common stock, and we have some dividends, and we have some sales, and we have a salary expense.
Let me see the number for
Okay.
salary.
I think I think those are the accounts that are going to be there. So what I want you to do now is to go ahead and prepare the trial balance. I'm assuming you can do the T accounts in your head. So how much cash we got? 1 million, 2 million, 4 million. That's 6 million. Then we paid out what?
Should have 5 million in cash though, right?
Right.
I mean,
So
not 1 million in cash though, right?
we got in one,
Unless-
2, and 4. So that's 7, right?
You supposed to have 2 million in cash left.
Yeah,
We
two.
paid out what? 4 and 1. So how much cash we got left?
2 million.
2 million on the debit side. How much we got in receivables?
Let me go back. 10.
Common stock,
Go look at that.
500,000.
I think was it 7?
Oh, wait a minute, take that back. 4 plus 2, 6. That's 7 million. You're correct. Dividends.
I don't remember that number.
I think that was 1 million. We paid those folks.
Okay.
I'm just doing the posting in my head. Just I'm just looking at these transactions. Then sales was what? 10 million.
10 million.
And the salary expense was what?
4 million.
4 million. Okay. So does this trial balance balance?
See.
Yes.
Yeah.
Yeah.
Yes.
Wait, I still need to. All right. Never mind.
Now can y'all prepare my financial statements?
Yeah.
Because
I
I
already
got
I
me
prepared
already,
it.
doing all the work.
I already did the income statement.
I already finished.
Yeah.
Okay, so what do we have on the income statement? What do we have for sales?
10 million.
10 million.
And we have what else? The salary expense.
Yeah.
Yes, 4 million.
4 million.
Net income is 6 million.
Does everybody see the net income being 6 million?
Oh, we got another expense. Go back. Oh, no, I don't think we do.
We just have one.
No, we only had that one.
Oh, okay. All right. Yeah, 6 million. Yeah. All right.
Let's do the balance sheet.
Assets, cash, 2 million. Accounts receivable. What was it on there? Was it 10
10
million?
million.
Okay, so we
That's it. So that's 12 million total current assets.
Yeah.
so we for the assets we just have cash,
And accounts receivable.
And accounts receivable. Yeah.
accounts receivable, 10 million. So my total is 12 million.
Yes, sir.
What I have on the other side, that's gonna get me to 12 million.
The equity. So you got common stocks, 7 million, and the return earnings, 5 million.
5 million. How we get that 5 million?
You got 5 million because you did
Because
the
you
retained earnings
subtracted
part.
net income from
Do
the
it.
dividends.
Yeah, you didn't do it on the statement of retained earnings. I don't think you did it. But yeah,
So
5
Yeah,
we
you
million.
just
didn't do it.
Yeah. Yeah, you
so
subtract the 6 million from the million.
so we know that the common stock is how much?
7 million.
7 million.
How do we get on? That's the common stock. And the retained earnings is how much?
5 million.
5.
How do we get 5 million?
You
Subtract
subtract
the
the
net.
net income from the dividends.
So the net income we said was how much? 6
6 million.
6 million.
6
million
million.
dividends. So retained earnings now would be 5 million.
5
5
million.
million. Yeah.
So are we in balance?
Yeah.
Yes, sir.
So now we're in year 2 and they get to you. And they say, look, we've made $6 million. We got 12 million in assets, 2 million in cash. Give us your $1 million to invest. And you say this looks pretty good to me, so you give them your $1 million. The owner pays himself a salary of 2 million. He pays the level 2 investors 1 million, and he declares bankruptcy. What is going to be the status of your 1 million?
You said what? Are we supposed to answer that question?
Yeah,
Uh, so I'm going to 2023, investing 1 million, paying the salary to 2 million, and investing 1 million or investing it again, or
this is
the
the level
investors
2
pay you.
investor. Level 2 investors. Remember, there were level 1 investors, owner.
Yeah.
Level 2, they put in 2 million. Level 3, and you at level 4. So the level 2 investors get all of their money, right?
Yeah.
They got $1 million here and $1 million here.
Yeah.
They're $1 million here. So they get their money. But for the level 3 and you at level 4, they go bankruptcy. So why do they go bankrupt?
Because
As
they can't
long
afford to
as,
pay.
as long as the owner put in $1 million, then somebody else put in 2 million, somebody else put in 4 million, things can keep rolling. But now the $4 million people want to get paid, but you didn't put in enough to pay them. You only put in $1 million. So that's when we get to a level which is less than the prior level. That's when they go bankrupt.
Got you.
That's when they go bankrupt. So when you in early, you're okay. But when you get in late, you got an issue. So that's what was happening with FTX and Ponzi. What's his name in New York? But this is basically
Madoff.
what they did. Yeah, Madoff. So this is basically what they did. But it looked good. It looked okay. Okay. Net income. So and this is why I have to make a journal entry. They use the journal entries, cook the books and make it look good. And remember that as an investor, you're only seeing the income statement and the balance sheet. That's all you're going to see. So unless you are very astute, know something, do some intense work, you're going to end up just like these other people. That is, for retirement for you all today, it's 401k. And you got to invest in companies, so that you will have something to retire on. Okay?
They should look at the cash flows.
Are you going to do what?
I said they should look at the cash flows.
The cash flows would help us. But you see, you heard no discussion when you went through those analysis. there's no discussion about looking at what the cash flow look like, correct?
Correct.
And so that's what you have to realize. But if your training doesn't teach you to do that, if your training just teach you to look at an income statement and a balance sheet only, then you can't make uh, rational decisions. You can't make objective decisions. See if I can. Yeah, and I was seeing that feedback was coming from you, Andre. It looked like it is. So I muted you. Okay. So what we're gonna do? Because right now we just like everybody else. We see the financial statements and we don't have anything to, if we just stop here to be able to make the appropriate decision in terms of, okay, what is this company doing? So we have now statement of cash flow, and this is in course content. And this is the fourth financial statement. So the balance sheet and the income statement, we just looked at in statement of retained earnings. We're familiar with that. That's why I had to prepare them. But now we got this statement of cash flow. It has three portions: operations, investing, and financing. Now, when you start a company, any company, the basic thing that you're doing is putting cash in and you got common stock. So your cash going in is represented by common stock. And what is supposed to happen is your cash is supposed to go up through earnings. Okay. Your cash is supposed to go up through earnings. If that's not happening, it's a problem. Okay. So this is what this statement of cash flow tries to look at. So it's a good statement in terms of liquidity, eliminating different methods. You use FIFO and LIFO. You might get different incomes, appreciation methods, but we're just looking at the cash flows. And in a lot of situations, it can help us detect fraud. There are three parts of the statement: operating, investing, and financing. Operating is the money that a company gets from sales. Macy's is supposed to get its money from selling clothes. Not supposed to get money any other kind of way. And that's the key thing that we're looking at. Investing is when, to eventually get more money up here, they expand. And financing is when they borrow and pay off what they borrow. So let's look at you as a student when you graduate. You'd like to have enough salary as operating to buy some more assets. So you want this negative. You want to be able to buy a new car, a new or bigger house, and you want to be able to pay off your student loans and still have money left over. That is, you'd like to have a situation where your operations are $1 million. You're doing well. You want to buy some more assets, okay? That's why you're in school. Let's just say you pay $400,000 for that. You want to pay off your student loans and still have cash left over. Okay, so in this case, $1 million less 700, we'd have 300,000 left over. So personally, this is how you want to look. You want to have a salary where you can buy some things, where you can pay off debt and still have money left over. So this actually should be a minus sign here. And so a company needs to look the same way. So when we look at a company, we look at that statement of cash flow that has these three parts here: operations, investing, and financing. A company with a good statement of cash flow is going to have a positive number in operations. If operations is not positive, you got to walk away from that situation. You got a problem. These next two need to be negative, or possibly financing can be positive, but you'll be concerned. But just like in your personal case, you don't want to get some cash by borrowing. You want cash to come. You want to be paying off former loans, investing, and still have cash left over. So one of your projects that's due in a week, you're going to look at the company that you're working for, a company that you want to work for, or a company that you want to invest in. And you're going to be telling me, you're going to go online and Google and get their cash flow statements for the last 3 years. And you're going to tell me, using this criteria, whether you invest $1 million in the company or not. So if you're working for a company that be publicly traded, then you go and you look at that company. Most of you in Houston, so you look at companies in Houston if it's for working or who you can invest, or who you're going to invest in. Now I don't want any Apples, uh, who else? Google's and stuff like that. I want to see a regular company that you're going to work for. Okay, got it? So we'll talk about that a little bit later, but that's how you're going to apply this information. But we'll talk about that more on Thursday as you get a better picture of what we're doing. So we're talking about this statement of cash flow. It's got 4 parts: operation, investing, and financing. And when you prepare the statement of cash flow, you want a change in cash that's positive. You want operation to be positive. You want investing and financing to be negative. Well, that show is different and unusual and everything else. It sure is. But that's why the people couldn't invest, could not evaluate those companies. They said, this is just too hard to understand. This is just too theoretical. It's just too out there. I don't know. Well, when you don't know about this statement, then you can't detect frauds, Ponzi schemes, and etc. Okay, let's look at how we derive this statement. There's that old equation: asset equal liabilities plus owner's equity. Everything comes from that statement in accounting. Then asset equal liabilities plus common stock plus retained earnings. Then cash plus the other assets equal liabilities plus common stock plus retained earnings. And then finally, as we keep working with this equation, cash equals liabilities plus common stock plus retained earnings minus the other assets. You see, for you personally, first of the month is when? Tomorrow. And what do you need tomorrow?
Rent.
That's right. You need some cash. So in any business, it's the same thing. Cash is what's important. So we have all these other things, but you will miss the mark if you don't have a statement based on cash. Now, in Principles 1, we just simply looked at the cash transaction. It was 10 or 15. But if we have 1,000 or 2,000 or 10,000 transactions, we can't do it that way. So we got this equation. Then we know cash equals the current liabilities plus the long-term liabilities plus the common stock plus the retained earnings minus the current assets minus the long-term assets. Then cash equals current liabilities plus long-term liabilities plus common stock plus net income plus minus dividends minus current asset minus long-term asset plus contra asset. So this equation, we're just expanding all of the items that would be in that equation. And finally, for the statement of cash flow, this last line, delta, the change in cash, equals the change in all of these other assets. So we're going to use this equation, and if we use this equation and look at the change in everything, we can do a statement of cash flow and not look at 10,000 cash transaction. Got it? So that's how we prepare this statement of cash flow. Now, before we look at an example, there are 4 parts to the statement of cash flow: operation, investing, financing, and the change in cash. And so for all of these items, we have to determine where they go. That is the cash. That's in Roman numeral 4. Now we got to see where these other items go to come up with sources and uses of cash. So we're just looking at where they're going to go right now. We'll go from there further. But what you should realize that if you have a current liability, it's going to be in part 1 operation. That's all we're looking at. So the change in cash is in part 4. A current liability is going to be in operations. A long-term liability is going to be in part 3 financing. Common stock is going to be in part 3 financing. Net income, that's an operation. That's the main thing that we do. Dividends is in part 3 financing. Current assets is going to be in part 1, Roman numeral 1. So it's going to be in operations. Long-term assets are going to be in part 2, and the contra assets are going to be in part 1. So what we're saying is when we get these changes and we're trying to look at our sources and uses to get to our bottom number, this is where these items go. The current liability is going to be in part 1, long-term liability part 2, common stock is going to be in part 3, net income part 1, dividends part 3, current assets part 1, long-term assets part 2, contra asset part 1. Now, the next thing we have to determine is whether something is a source or a use of funds. Is it a source of funds or is it a use of funds? Because some items are sources, some are uses as we get to the net change. So let's look at our chart again. If you get a student loan, what happens to your cash account? If you get a student loan,
It increased.
it increases. So if a current liability goes up, it's a source of cash. But what happens when you pay your student loan? What happens to your cash then?
It goes down. The interest.
It goes down. So therefore, if the current liability increases, it's going to be in the source column. It's going to be in the source column. If it goes up, if it goes down, it's in the use column. So we're just looking at where they're going to go. We got a little template that's going to help us out eventually. For long-term liabilities, they're in part 3. Same rule applies. When a long-term liability goes up, it's a source of cash. When it goes down, it's a use of cash. Common stock, when it goes up, it's a source of cash. If it goes down, it's a decrease. Net income, a key number here, when it goes up, it's in part 1. It's a source of cash, but if you got a loss, that's a use. Dividends are always going to be in part 3 as a use. They increase their use, they're an expense. Current assets going to work just the opposite. If you go buy a computer, what happened to your cash?
It
It
goes
goes
down.
down. So
Appreciate
whenever you uh, buy an asset and an increase, it's a use. It's in the use column. On the other hand, when you sell it, it's a source. So when you sell inventory, it's a source of cash. But when you buy it, it's a use. Long-term assets work the same way. When you buy them, they're a use of cash. When you sell them, they're a source of cash. And then the contra assets are always going to be in part one, and typically they're going to be sources. They're going to be sources. So we got our rules now, but to make your life easy, somebody told me today, the tutor said, that's just too easy for them, Dr. Boyd. I got cash, look, cash flow from operation. I'm telling you whether an item is a source or a use. If it's net income, it's a source. If it's a net loss, it's a use. And I'm telling you on the current assets, if they decrease, they are a use. If they're a source, if they increase, they're a use. Liabilities are working just the opposite. If they increase, they are a source. If they decrease, they're a use. So I got everything where it's supposed to be. You just got to plug it in and get the net change. We're going to do an example in a few minutes. Then a loss on a long-term sale of an asset. Loss on a long-term sale of an asset. That's a source. It was a loss. It was a gain. It's a use. Because we don't want a company selling long-term assets and claiming that's operation, because it will not occur. So if Macy's is trying to say they're getting cash by selling their stores, well, that has to come down here in part two. So you know that that's not recurring cash. So we're going to take it out, the impact of it out here. So if you sell a long-term asset, that's not inventory. So that got to be down here in part two, so you know that this is not recurring. But now you got to watch this. And we love to see the fact that you purchase a long-term asset and this is negative. And of course, we'll add up the sources and uses and come up with the net change in each area. Then the cash flow from financing. If you issue stock, source. If you purchase your stock back, it's a use. If you receive a long-term loan, it's a source. If you repay it back, it's a use. And if you pay a dividend, it's a use. And so what we do, we look at sources and uses in part one, net change. Sources and uses in part two, net change. Sources and uses in part three, net change. And when you combine part one, two, and three, it needs to equal what's in part four. When you combine 1, 2, and 3, it needs to equal what's in part 4. Now, let's look at this example, your in-class problem. And notice what we have, an income statement and a balance sheet. So this is why you had to do that income statement and balance sheet, because we're now going to work with it, okay? And to get our statement of cash flow done, to get it filled out, remember the equation said the change in cash equals what? The change in all these other assets. So we got to get the change in cash and then fill in all of these other items, their changes, and see what happens. Now, because this is just so confusing, and I want you to get some credit to get a C, you just got to do 4 things. You got to be able to do 4 things, you get a C on your test next week. First of all, we go to cash. Okay, we go to cash and we get the change in cash. That's the answer to the problem. So the first thing you got to do, you go to cash. And so what was our change in cash? 0, right? Let me see.
Yeah, it looks like
In,
zero.
yeah. insert a column to the right. I put these changes in here. So everybody ought to be able to know that the first thing that you're going to do, the first thing that you're going to do is come up with the change in cash. That's a zero. You take that change and you put it right here. Zero. That's the answer to the problem. So our beginning cash was 100,000. Our ending cash was 100,000. So we know when we do those other three parts, they got to be zero. So you already got the answer. Notice that. See that, Kayvon? You already got the answer. All right. The second thing I want you to do is to put in the net income or loss. So the first thing you're doing, this is the first thing you're doing, is you coming up with this change in cash. So I'm putting a 1 down here. And I'm put it in red. So you know that. So you can get something on this statement, you put the change in cash. Now the second thing I want you to do is, companies got to have a net income or loss. So that's the second thing I want you to do. I want you to go to income statement and put in the net income or loss. So when we looked at this company, right, we went here and what was the situation? They had a net loss. So we go back to our template. If it was income, it would be over there. It would have been a source of cash. Since they lost money, it's a use of cash. So we're going to put 75,000 in.
35,000.
So now you got two things done. Now you only got two more things to get done, and you can make a C on the test. And you won't be able to say it just so hard. The third thing is this depreciation number. Remember, depreciation is not a cash item. We debit depreciation expense and credit accumulate depreciation. It's an adjusting entry. And it's always a source. So the third thing you're going to do, so you don't have to strain yourself too much and say, I just can't do anything. It's just too much for me. The three, I'll put that in red. So you're not going to be able to say you couldn't do nothing. So you're going to go down here, pick up that depreciation, and you could have gotten it through the change in depreciation too. Okay? But I'm just trying to help you in case it's just so confusing. You got third thing done.
Professor Boyd,
Yes.
are you recording this session?
Do we need to record it?
Yes.
I think it's being recorded.
Wait, what'd you say?
Last time I checked, it was being recorded.
Okay.
Let me just see for a second. Yeah, it's recording. Let's get back where we were. My old problem. And now we got the fourth thing we're going to do. And the fourth thing I want you to be able to do on this statement is put in dividends. What are the dividends?
The use of gas.
Yeah, but how much is it? What are the dividends in this problem? You see them? That's the fourth thing I wanted to do, put in the dividend.
Is
Okay,
it under the
so
account payable?
say what? All
Is
right,
it the
let's see.
account payable?
Let's see how we might be able to calculate these dividends. We have a beginning retained earnings of how much?
300,000.
Okay. Then we have a what? A net loss of what?
Net
What's
loss is
that?
what's 75,000?
5,000.
Yeah.
So that becomes a minus 75,000. So my net at this point, net retained earnings, subtracted
225,000.
225,000. And what I know is that next on that statement of retained earnings, I'm going to do what? Subtract the dividend. But I don't know what the dividend. I don't see it. But I say, wait a minute, now there's something I can do. I got an ending retainer. Let's see.
And the retainer is 200,000.
Okay, your ending retainer earnings. If I can get it up here, delete.
So we wouldn't put the difference.
I didn't say you would.
No.
But if you don't know it and you know these other three things, you can calculate the dividend. So what did the dividends have to be?
25,000.
25,000. So a lot of times when you're doing your homework problems, you got to calculate that. So you just go to a statement retainer and you know that the dividends is the unknown. But you're going to always have beginning retained earnings, ending retained earnings, and the net income from the income statement. So we put that 25,000 in here. So you got the template on where it goes. Now, when we do, so we said this is what we do fourth. So you got four little things you can do to get your C. Get the change in cash, get net income, a loss, depreciation, dividends. Now, let's see where we are. Remember, you got to look at everything. So we got the cash done. The change in depreciation we said was 25,000. We got this account done too. And then guess what? We got the retained earnings account done. So the change in retained earnings was 100,000. It went
Negative.
down by 100,000. And it's reflected what? A loss of 75 and 25. Okay, so remember it was what? The change in cash equals everything else. So we got the change in cash, we're taking care of accumulated depreciation, we're taking care of retained earnings. We just got to do these other numbers. So let's go to account receivable. What did account receivable do?
Went down 25.
It went down 25,000. So if the asset goes down, is it a source or a use of cash?
To use.
So if you sold me your cell phone, your cash would go down.
Oh, wait, no, source.
So when the asset goes down, so we just go up here and put a decrease in the current asset. That's a source of cash, 25,000. So that's the account receivable. What's our next asset? We're gonna knock out. We're knocking out each one. Inventory,
So it increased 150,000.
right? So that would become what? A use.
The
We bought.
use.
Use of
Yeah,
cash.
yeah. You see what? So what you're seeing here? Wait a minute. Why are you buying 150,000? You're supposed to be selling inventory. So if a company just go around and buy inventory, can't selling, and that's why you always see sales. That's gonna make your cash flow statement look very bad if you buy an inventory you can't sell. Okay, so we got cash, receivables, uh, then we got the equipment. So what happened with the equipment?
It
It
jumped
went up.
300,000.
It went up 300,000.
So where we gonna put it at?
Liabilities.
It's going to go in part two, right? It's a long-term asset. So just keep in mind, the current assets and everything up here. The long-term assets are down here. And so this is equipment. That was what, 300,000? Okay. The thing got the template. You know how the template, you will really be struggling. Okay. Then we got one other thing, investment in IBM stock. So what happened with this IBM stock? We must have what? It went down, so we must have sold it, right?
Yeah, so that was source.
Okay, so it says the stock went down. So look here alertly, A and B students. But there was a gain of 25,000 on sale. So if some cost you 50 and you made a profit of 25, how much cash did you get?
If something cost you 50, you made 25, you lost 25,000.
Wait a minute now. It cost you 50 and you made 25.
Oh, you made 25,000?
Yep, so you got a gain there.
Oh,
So
well, so,
therefore, you must have got $75,000 for that stock.
yeah.
So
Well,
so
depending
by
on
proceeds on the sale of the stock, 75,000. But I'm not in the business of selling stock, okay? And so therefore, this little gain here, 25,000, I'm gonna put that up here. So that wasn't, see, the gain is in the, in the income statement right now. And we got that gain in part one. The loss should have been higher. So we're gonna, put it in the use side because see, in actual fact, the loss from operation was 100,000. The gain on the stock reduced it, but the actual loss from operations is 100,000. That's what we want reflected in operations part one. Okay. So when we put 75 here as the cash we got, and then we put this use over here, this gain of 25,000, we still come back. Let's see if I get down here too far. Yeah, we still come back to this net change of 50,000. That's all we want. So now in this problem, in your homework, you don't always have this, but I want an example that has everything in it. Okay, so the example has everything in it. Okay, now it's time to look at the liabilities. We have accounts payable. Accounts payable did what? It
Went
changed, it
down.
went. So what happened when you pay on your student loan to your cash account?
Goes down.
Goes down,
Decreases.
goes to use. So accounts payable, that was what, 50,000? So, and that's going to be in part one. Remember all the current assets and current liabilities in part one. So that would be 25,000. So we're almost done. We just got two more to go: long-term bonds and common stock. What happened to the long-term bond?
Anchor.
Went up 450.
That time you still got a whole lot of money borrowing. So that's what this is showing you: 450,000.
Wait. That long term borrowing went up. It was payable though. So you gotta, yeah.
If you borrow $450,000, what would happen to your cash account?
But you're a company, you're paying it out, right?
How are you borrowing it?
Yeah. So that's a well, you if you borrow a source of cash,
Yeah.
but it's yeah.
So your cash went up $450,000. Now you might say, why did you borrow $450,000 and buy some inventory you couldn't sell? So this is what this is pulling out. Yeah, it's okay to borrow money, but in the end, you got to pay it back. And guess
Yeah.
what? We only got one account left now. What do you think? We got one account left.
No, we got two, huh?
One. We already did retained earnings. When we put the dividends and the net
So
income in, that took care of retained earnings.
okay. So common stock went up
50.
50,000.
So you know if common stock goes up, what happens to cash?
Goes up.
Okay, that's right. That's the first journal entry,
So it's a source of cash.
right? Common stock was 50,000. So now we have everything in. So now we got to sum up by area, and then they come to zero. So our sources of cash for the company with depreciation, account receivable. So the total sources were 50,000. What were the uses? Loss, inventory change, paid on accounts payable, gain on the sale of a long-term asset. Those were the uses in this area. So we
It's
add those full numbers up. What do we have? 275,000.
275.
So in part one, even though it's a little nebulous what we're doing, but we know right away what. As soon as we see this negative number in part one, what?
It's
Oh,
bad because you
got a
used
problem.
2025. Damn. So I got a question. So like, but normally, oh nah, he right.
So that's what the statement does. It's letting you write it. Yeah, your cash might have been, your change in cash might have been zero, but you much worse off than that because you lost 225,000. And let's go to part two. 75 and 300.
225.
Our difference is how much?
225.
Uh, Make sure I got everything in right. Okay, let's go to the found part. Looks like we left something out here. Well, no, we're okay because this is a use. I got it. Okay. So we lost 225. Then we bought 225 in equipment. Wait a minute, 50 from 79. Okay. So let's go down here then and look at where we are. In part three, we have what? We got 500,000. We got the dividend. Put it down. So we got the dividends 25,000. So we're at 475, correct?
Yeah, 475 positive.
Now we're supposed to be able to combine these two numbers and get this zero, but that's not happening right now.
It's
Let me see where
500,000.
we are.
It's 25,000 off.
Yeah, 25 and 25 is 50, right? 75, 150, 25, and 225 is how much? If you add these four numbers. Add 75, 150, 25, and 225. And 25. How much do we get?
So you got 100. It's 250. That's 275. 75,
Okay,
150,
so
25,
50,
25.
225. Okay. Then we got 75 here, and that's 225.
75, 75.
Then this is 500. Let's force 75. We are off 25,000 somewhere. Let's see if we can find it. We got the account receivable again. So 75 went down to 50. So that's over here. Appreciation, we got that in at 25,000. Change in inventory was 150, correct?
Yeah.
Got 150 up here. Got that there. Equipment 300. Okay, let's look at the IBM stock. That changed 50, 25 gain, and cost is 50. 75, that's 25, is 50. Okay, the long-term bond was 450. That in. And the change in common stock was 50.
I got a question. Accumulated depreciation.
Mm-hmm.
So it goes up 25,000, but it's still negative,
It's a use of, it's a source of funds because it didn't require cash.
right? Okay, so we'll put it as a source of funds, not a use.
It's a source because we would
Oh,
have subtracted it out when we did the net income. See, we subtracted out depreciation. That was not a use of
that was
cash.
okay.
We're eliminating the fact that we took the 25 out. Let's see. I'll have to look at it and get back with you all on it. But
We
total all of these out. I just have to total them and see. 500. But when you add these two numbers and subtract this, you're supposed to be at 0. Let me see if I can spot anything quickly. Earnings. 100,
I have a question on the investment in IBM stock.
Okay.
So what do we do when it says gain on IBM stock right there, 25,000?
Well, if the gain was 25 and the stock cost you 50,
Then you
then you must have got 75,000 in proceeds. Okay. And right now that that gain is reflected in reducing the net income. And so we put it in. So I'll look at this and I'll go ahead, go back and correct it, see what the difference is. Something simple that's in there. That loss of 75. So 75 and 150 and 25 and 25. That is 275, right? That's 275 less 50 is 225. 75 from 300 is 225. Might be some flaw. So I'll look at that and I'll get back with you all on in terms of what the correct numbers is. It might be something in the problem. So anyway, I'll find that out. Now, in this handout, these problems, 8-1, 8-2, 8-3, 8-4, 8-5, 8-6, 8-7. Well, we got 17, right? So each team has a problem. Got it?
okay.
And what you got to do when you work your problem, you need to tell me whether you would invest $1 million in the company or not. So,
well, we're choosing a company, correct?
Now that's something different. I'm saying for these problem situations, same thing. When you do the statement of cash flow, you need to tell me whether you'd invest $1 million in the company or not. Otherwise, you're just making calculations. So we know I got to find that issue, but we know in this company what?
You wouldn't invest in.
It's in bad shape. It's got inventory is buying and can't sell it, and then it's buying a bunch of equipment and it's borrowing a whole bunch of money. So that's what the statement tells us. Or we just, and when you do your problem, you just have to look at the summaries. We know right away 225 negative in part one, that's a problem. 225 in part two is going away, that's okay. But they financed this company with this long-term bond and some additional stock investment, but they weren't making money. Got it? So I'll go through and find that issue. But in the meantime, each team has, you got a problem based on your team number. So we have those numbers. So this would be a 4-person team thing would do. I had it as 2-person, but what I'll do, we'll do 8, 1 through 7. And then once we finish that, we'll go back and do 8 through 13, 14. 8 through 15. So I'll make some assignments on that later. But right now, I just want you to do your number and be ready to present it next time. Got it? You got to
Yes, sir.
work your problem. You got 4 team members, each team member doing a part. While one
Yeah.
part
So we present this on Thursday, Mr. Boyd?
on Thursday.
Thursday? Okay.
Which
Each
Thursday? This
team,
Thursday?
yeah.
Oh,
So what
this.
you know between 9 and 30?
We doing the presentation on the assignment that was due today, or the one it's a new one that's due on Thursday.
The one, I don't know what's due today, but the one that's due on, you just turned that in today. I was just to get you up to speed so you be able to work these financial statements. You're just turning that in. That then you go to tutoring if you have some issues with it. But on Thursday, see, we back in the statement of cash flow where that's what we're working on. That was just a review problem.
And you gonna post
Professor,
this template, right?
It's already there.
With all this stuff you just did on it.
Yeah, it's
Huh?
what I'll
I mean,
do. You see,
Hey, Professor.
you you have in Blackboard this, but what I would do would be
look
to
at the
put another
recorded.
one that's going to be in Excel. 'Cause I know Kevon likes to work in Excel, so I'm gonna get an Excel template in there too. And Andre better
Are you
work
gonna
in
put,
Excel.
you gonna put the Excel one in there?
I'm gonna put an Excel one in there too.
All right, bet. Yeah,
All
it's
right.
easier to work. Wait, is this 2-person or the four person?
I'm gonna make it four
Four.
person.
All right, I got
Make it 4 person. That might make it go better. So we'll make it 4 person. See how we come on this. So because you have the template, this is not the hardest thing to do. Okay, it's not the hardest thing. It's new, it's different, but that's why all of those Ponzi's were able to happen because people didn't take the time to understand the statement. They didn't look at the statement. They just looked at the company and the income statement and balance sheet and stock. The other thing I want you to do, go back to this. So turn this into, on our example where we got the income statement and the balance sheet, do a statement of cash flow for this company, this composite scheme example, and see what you find out. So you're doing, all teams is doing the one for the Ponzi scheme with, so you got the financial statements and everything. Go ahead and do this one, plus the one that you assign in, the regular one that you assign in course content. Okay, so you got two you're doing, that little simple one. See what you find out when you use a statement of cash flow on the Ponzi scheme. So we'll do that one first, and then we'll go to the other ones. Any other questions?
Mr. Boyd,
Yes.
for the assignment that was due today, my partner had to go to the emergency room and she turned it in late. So,
Okay.
and she said she emailed you. It's Arias Willis.
Okay. I'll look at that.
Uh,
Also, Dr. Boyd, my partner turned in our assignment as well, but forgot to put my name on there. Do you want us to resubmit it with my name, or do you want me to just tell you?
Turn it in without your name on it. Did you
Yeah,
do anything
yes, sir.
and it turned in without your name on it?
Yeah.
See, that creates extra work for me. So we can look at all of this stuff. All right.
You gotta look for mine too, Dr. Boyd.
I can look for
We
yours
had
too.
yeah. We had problems with we had problems with a journal entry. I mean, I was doing it, but like we going back, it's gonna mess up the numbers. So it's like we gotta go back and fix our journal entries. That's why I was in the office today. So just asking if I could just turn it in tomorrow.
Tomorrow.
Yes, please, please.
Did everybody else get a turn in?
I'm pretty sure they did.
Yeah, I got it. Yeah.
Well, for the people who are letting out these problems, I would probably do an extension to tomorrow or something, but you don't get the same number of points. So I want it all in Blackboard. So email me, then I got to look for it. So what I'll do would be to do an extension so y'all can correct all that stuff that you got. Get everybody's name on it. And I might do a second submission or something for this case where the person's name didn't get on it. So I'll make those adjustments. What time tomorrow, Andre?
No, you can do the same time tomorrow. We gonna work on it tonight though, but
All right.
yeah, we gonna work
So
on it tonight.
I'll make those changes and extensions so everybody get it in Blackboard because I don't, I might grade this a week from now. Okay, then I got to go back all through my emails to try to find it, and it's hard enough with the amount of work we have and everything to do that. And so I'd rather for it to be in Blackboard. So I give y'all a break and reprieve this one time. This one
Thank
time.
you.
But you do not have a reprieve for Thursday because that's not a long involved problem there. Okay?
Yes, sir. Yes, sir.
Yes, sir. Yes, sir.
Not a long and involved there. Once you get into it, you should knock it out. One way to do that is everybody work it out independently on the team, then come together. Then when y'all present, everybody on the team presenting one part of it. Okay?
Yes, sir.
Okay, so you all have a good one. I'm gonna go in and make these adjustments so you all can get this in, I guess, 4 o'clock tomorrow. What is it, 5:30 tomorrow? I'll adjust it for that. But if you
Sir,
know, when
boy.
later, you won't get as many points, so you got to make an adjustment. Okay?
Yes, sir.
Okay. Anything else for the good of the cause?
Hey, Professor Boyd.
Yes. Yes.
Oh.
Yes. Oh, come on. You muted, come, Kayvon. You muted.
Can you hear me now? Can you hear me?
I can hear you now.
All right. I was finna, what's it called? I was telling you, did you get my email that I sent you?
When did you send it?
I sent it yesterday, and I sent it yesterday. I was gonna say I sent one today, but I didn't. I sent one yesterday. It was just about me and Candace. Me and Candace in the same group. You had put her in a different group. She in
All right,
group A.
check
She
it out.
paired with me.
Okay,
Yeah,
well, we
I put
can.
her name. I put her name in the document.
That's fine. That's fine.
All right, I got you. I submitted 2 documents. I submitted the Word one, and I transferred it over to Excel sheet. So I sent you 2.
Who are you?
You can look. You can
You want me to look
you
at
can.
both of them?
Yeah, I submitted both of them. You can look at the Excel one though if you want to, but I submitted both because I know it's easier to look at the Excel than it is the Word.
Massage before
Yeah.
practice.
Okay.
Want a massage before practice?
No.
How we
All
coming,
right, Professor.
Maya? All right. Have a good
Oh,
one.
Professor Boyd, I have a quick question. So
Okay.
you're reopening up the assignment? Because what does reprieve mean? What did you mean by that?
Well, some people didn't get it in. I want it all in Blackboard, but they won't get the same credit as somebody who got it in on time.
Okay. Okay. I turned mine in. I'll just
Okay.
understand.
Sounds good. Y'all
Okay.
have a
Bye.
good one, and I'll see you all on Thursday.